If you've been struggling with how to trade market structure profitably, this video is going to be for you. Hey you guys, what's going on? My name is Shaquan and I'm the trading educator at SLFX Trading. I am here to educate you on 5 tips to trade market structure profitably. Now I want you guys to rock with me. It's going to be a quick video, maybe 10 to 15 minutes, but make sure you have paper. Make sure you have paper because we are going to get into the information. Okay, so now on to the tips because I don't want to hold you up. Tip number 1, become familiar with market structure and why you trade it. So let's break this down for a quick second. What is market structure? I like to say it like this. Market structure is what you place on your price chart. Market structure is what you decide to trade. It's what highlights your entries and what highlights your exits. That's it. That's it. That's it. Because think about it this way. When you come to a price chart, there's nothing on there but candles, or maybe the lines, or maybe Renko bars, or maybe Hakanashi candles. It's whatever price action you decide to look at, right? The visible movement of price. That's price action. But, you know, when you put something on that price chart, let's say support and resistance, let's say key levels, supply and demand, quarter points, whatever, that's market structure, because you're saying at this structure point, I think price can go up to this area and give me an entry opportunity or an exit opportunity. We'll get into that in just a little bit, but that's market structure. Okay. And there are many types of market structures to choose from. So just be aware of what you're choosing and why you should trade it. So that's tip number 1. Tip number 2. Be ready to sit in front of your price charts and plot the structures on your analyzing time frame. Now, some people are going to say, well, Shaquan, duh, if I choose it, I got to plot it. Very true. However, if you really think about it, some people confuse multiple time frame analysis when it comes to plotting structures. Like, for example, you could ask the question, well, what's the best time frame for me to plot market structure on? And if you've asked that question, you prove the point. It can be confusing. So I'm going to give you guys some tips on that as well too. Number 1, your analyzing time frame is not your entering time frame. I mean, it can be. And let me explain it this way. When you think about an analyzing time frame, your analyzing time frame just basically means this is the time frame that you're analyzing to give you the best information of where you think price can go to and fro in between your structures. That's all it is, right? So for example, if you plot support and resistance on, let's say, the daily time frame, you're saying you see the big information, you're seeing the bigger picture, it's less noise, it's less things you have to analyze, and you're going to use this information to say, hey, this is where price is traveling to and from. And then your entering time frame is going to be where you decide to place your entry, maybe on the same time frame. For a lot of traders, it's not, especially if you're on the daily. Maybe you're going to drop down to the 4 hour, maybe the 1 hour, maybe the 15 minute, but you're just basically saying this is the best area I believe price can go to and I can have an entry. That is your analyzing time frame. Okay, so that is tip number 2. Tip number 3, structures are best applied on higher time frames. That's it. And it's of your choice. No one can tell you what's the best time frame for you to analyze. That's a personal decision. So remember this, higher time frames are time frames that give you information for you to view what's good for you to know. What is that time frame telling you? That's what it is. So don't neglect the higher time frames. I've taught a lot of traders who've only been on lower time frames, the 1 hour and less, the 4 hour and less. But here's the common issue. And this is what they say.
Shaquan, I'm on these time frames, but I keep getting stopped out. Or I'm selling, but then the market goes up. Or I'm buying, but then the market goes down. Shaquan, what's going on?
And when I ask, well, what time frame are you analyzing?
Oh, I analyze the 1 hour.
Do you ever go up to the 4 hour?
No.
Do you ever go up to the daily?
No.
So that's what's going on. You can't see the bigger picture. You can't see the forest for the trees. All you see is these few trees in front of you, but you don't see what's behind it. You haven't got the depths. You haven't got into the depths of what's going on. So I'm going to need you to scale back just a little bit. Go up. Go up. And then we can talk a little bit more. And remember this, when you analyze one time frame a specific way, just because you go up in time frames, that doesn't mean you have to analyze it any differently. Analyze it the same, then drop down. And I'll give you guys an even more of a tidbit with time frames as well too, because it's going to be a separate video too. And by the way, if you've been having issues with this specific topic with time frames, you guys, click the link down below in the description. I have a free ebook, a free guide for you, how to time your forex profits. And it's talking about this exact thing, knowing when to analyze, knowing what time frames to analyze, and then sitting here and thinking about the time frames you're going to enter on. So there's questions already written out for you. There's pre-filled areas just in case you want to go ahead and print the ebook and you can use it for yourself. Okay, so make sure you guys click the link in my bio. It's a free downloadable ebook. Put in the information. It's called How to Time Your Forex Profits, and you got it. When it comes to your time frames, you guys, I don't want you to think differently about anything that you are doing. You need those higher time frames. And I'm going to give you guys an example. So if I'm looking at my daily, why am I looking at my daily? What's the information that it wants me to know? Maybe it wants me to know it's in an uptrend. Maybe it wants me to know it's in a downtrend. Maybe it wants me to know that it has a lot of momentum and it's not pulling back anytime soon. But if you're on those higher time frames, you can't see that. But when you're plotting your structures, if you're only plotting it on a lower time frame and you're not going up in time frames, you're going to have so much information, so much noise that you had to decipher through. And the daily time frame or higher could tell you you don't have to do all of that. So I just want you guys to keep that in mind, okay? So that's that part there. Don't neglect the higher time frames. Number 4, once price enters your market structure, let it give you a reason to enter. Let it give you a reason to open the position. There are times when I get asked all the time, Shaquan, price is at structure, but the candle hasn't closed. Should I go ahead and enter?
No.
Why would you enter on an open candle? What if price goes past your structure? Then what? What if it goes past your structure and then it closes below, but it's not the candle that tells you to enter? Like, for example, I'm just going to use support and resistance traders because that's what most traders know. What if price is at resistance and it's an open candle and it goes past your resistance level and it's a bullish candle? Would you enter for a buy or for a sell? Would you know to enter for a buy? Are you just going to say, well, it's past my resistance, that's price telling me to enter? But what if you enter and then at the end of the day, on a daily time frame, the candle closes as a bearish rejection candle? Then what? Now you're going to feel like you got in too early and you're going to feel like you've lost money. So we don't enter on open candles. Always wait for the candle to close, okay? So that's that part there. And because remember, guys, price action is the reason we do what we do here. It's the reason we do everything that we do. It shows us our price movement. It allows us to see chart patterns. It shows us which currency is moving in our favor, which one is not moving in our favor. But if price is not at your structure, we don't trade it. That's called being in no man's land. I'm not going to enter my trade just because I see any candle. No, the candle has to make sense. It has to be one that I personally know repeats itself. That's a very high probability candle that's going to lead me to profits. Like, I have to see that, right? So visually understand what candles work best at your structures. What shows you, or which candles show you that you should enter. Really, really simple, you guys. And then once again, if price is not at structure, you do not enter into a trade. So that's that part. And then we have tip number 5. Always know when to exit your trades. I'm going to talk about the support and resistance trader once again. If you enter your trades at resistance, exit at support, okay? Because remember, if you're trading at resistance and you sell, don't look left and say, what other structures can I plot? Or let me see if there's a candle or a low over here. No. You plotted market structure for a reason. Trade back down to your market structure. So go from resistance to support. If you entered at support, trade from support to resistance. Don't look left and say, let me see if there's another structure I can plot, or what's the last lower high because I see all these candles over here. No. Remember, when you're on that higher time frame, it's showing you the range in which you have permission to trade to and fro. Don't add an extra step. Never tell the market, well, I don't think it can go back there. You don't want to do that. What you want to do is trade your structures, because remember, you're the one who plotted it. That's what market structure is. You saw it from the beginning. Now see it through. Have mental toughness about yourself. And when you have mental toughness about yourself, you're able to hold the position and trade to and fro. Don't create extra steps. So now what I want you guys to do is I want you to go and practice these tips for yourself. Use these 5 tips and tell me how they go, and leave in the comment section below and let me know what you guys think about the 5 tips below. And remember to make sure you're subscribed and get your free ebook by clicking on the link down below. It's free. All you gotta do is just download it. So without further ado, you guys, I will see you guys in the next video.